Hello, this is Jay. We're going to talk about the DEX arbitrage, also the SEX to DEX arbitrage, that's centralized exchange to the decentralized exchange, and then the MEV problem, that's the maximum extractable value. This is the cost that most software ignores, and that is why it's dangerous for your bottom line if it's not done correctly. Again, watch some of my demo softwares on my channels, YouTube, TikTok, Instagram. Foundation, two different worlds, one asset, but different prices. So the centralized exchange, as you know, Kraken, Coinbase, Binance, all those, they have their running traditional order books. Their central authority matches the buyer and sellers, controls the custody, enforces the rules. Decentralized exchanges, pure code developed on a blockchain, no company in the middle. The prices are determined algorithmically by liquidity pools, not by order books. Examples would be Uniswap, Curve, DEX, and many more. My software tracks over 100 of them and over 30 centralized exchange. Because these two worlds operate independently, the same coin is often priced differently across them, and that gap is the opportunity. That is the arbitrage. So the two kinds are the centralized to decentralized. Capture the price gap between the one and the other. You simultaneously buy where the price is lower, and then you sell where it's higher, locking in the spread. You can lock it in right away. That's how I recommend it. The dangerous way would be to buy on one, transfer the coins, and sell it at the other, which is too dangerous because too much time passes. So you do need your coins positioned in the correct exchanges and dexes at the start, in the very beginning. Not a big deal once you get used to it, because you're going to know which ones you trade the most. The DEX to DEX arbitrage, sometimes some massive discrepancies, massive profits here on this one at times. You're going to capture that price difference between two decentralized exchanges. Example, Uniswap and SushiSwap. Pure on exchange execution, no centralized exchange involvement required. Both these strategies are non-directional. You're not betting on whether the coin goes up or down. You are capturing the structural inefficiency that exists right now in the market. And we usually see anywhere from 200 to 2,000 of these arbitrage trades per day on the software. Why price gaps exist and keep appearing. Unlike the SEX exchanges with the centralized order books, the DEX price assets, they're always using an automated market maker known as an AMM algorithm that adjusts price based on the ratio of tokens inside a liquidity pool, and these pools react to trades, not to global market consensus. When a large trade hits one of the DEXs, its price moves. Other venues don't automatically update. A gap is born, and it persists until an arbitrager closes it out. So we are helping the market. We are bringing liquidity to the market. We are bringing efficiency to the market. This is a good style of trading that you can sleep well at night. It's not like short selling or whatnot. There's a lot of fragmentation, hundreds of different DEXs across dozens of chains, and there's no unified price feed. We cover over 100 of them. New venues, there are new ones that come up, and we cover those ones too. Now, meet the MEV. This is the threat that most traders never see, known as the hidden cost. Maximal extractable value is the profit that block validators and bots can extract by reordering, inserting, or front-running transactions in the meme pool, the public waiting room for pending blockchain transactions. That's what the meme pool is. So you submit a trade, your arbitrage transaction sits publicly visible in the meme pool before it confirms. The bots detect it. Sophisticated MEV bots scan pending transactions in real time and identify profitable targets. And then they jump ahead. A bot pays a higher gas fee to get processed first, stealing the price difference that you were targeting. And by the way, it's not worth it to be a MEM trader for multiple reasons, and they have serious competition, unlike us. Why MEV math is non-negotiable. A gross price gap on screen is not profit. It's the starting point. Every real arbitrage trade must survive a gauntlet of costs before a single dollar is yours to keep. There are 4 cost layers: the exchange fees, the gas fees, the slippage fees, and the MEV exposure. These all must be deducted. Okay? $0 net on a profitable trade. What MEV ignorant software shows as profit can become a loss. Okay? Because a lot of them don't count that. They only count exchange fees, gas, and slippage. That's it. Only those 3. And they'll show you numbers that are absolutely not real. You must count in the MEV exposure. Okay, real net is your price gap minus all 4 of those. So software that skips MEV in its calculations is not showing you opportunities. It is showing you a mirage. And chasing them is how traders blow up their accounts on trades that believe are risk-free. Maybe not blow up, but they're going to lose 1, 2, 3, 4%. And after you do that a couple times, they're not going to do it again. And a lot of people throw in the towel. A lot of people think, oh, arbitrage is dead on DEX to DEX or DEX to SEX, and they're wrong. Okay, they just missed a calculation. So my software, Jay Lombardi here. It's 99% auto arb, and I call it 99% because it actually does everything. It just doesn't push the button for you. That's all. Okay, no API. We don't have any thing for you on that. Honest math, real opportunities, full cost stack on every trade. Every single signal here calculates the exchange fees, the gas fees, the slippage, and MEV exposure, which you can adjust it, but I already have it set for pretty high, together before surfacing any opportunities. So there's no mirages, and every centralized index is covered, okay? Every good one. I get rid of the bad ones. So DEX Arbitrage, it is a real frontier, but only with the honest math. It's a genuine arbitrage. The fragmentation of liquidity across hundreds of venues is fantastic, and when you do it right, it is profit here. If you do it wrong, these are traps, not profits. So you got to learn the honest version, understand it first, and make sure you have a pretty high MEV rate on the software. So again, my software covers all that, and you can get my free mini course that is just requires your email opt-in, or you can get my book for free. You just pay $10 shipping and handling. And if you have at least 10,000 or trade and you are serious, then set an appointment. Thank you. Bye-bye.